Remember the movie The Big Short? Christian Bale, Steve Carell, Ryan Gosling? All playing these brilliant, quirky guys who saw the 2008 financial crisis coming. But who are the real people behind these characters? And who were the ones on the other side of the trade, betting the house would stand forever? Let's start with the foundation of the whole mess. Ninja loans. No income, no job or assets. These were subprime mortgages given to people who had absolutely no way of paying them back. Banks bundled thousands of these risky loans together into something called a collateralized debt obligation, or CDO. Think of it like a fruit salad. Few good fruits, but mostly rotten ones. They got the ratings agencies to slap a triple O rating on this toxic garbage, making it look as safe as government bonds. Enter Wing Shou, the CDO manager played by Byron Mon in the movie. In real life, he ran a firm called Harding Advisory. He was the guy happily packaging and selling these ticking time bombs. In the film, he's portrayed as arrogant and clueless, which according to the real people involved, wasn't far from the truth. He was making a fortune selling these CDOs, completely oblivious to the rot inside. Then, things got even crazier with synthetic CDOs. These weren't even bundles of loans anymore. They were basically side bets on whether the original CDOs would fail. It was like a casino placing bets on another casino's bets. This is where Steve Eisman, the real-life Mark Baum, played by Steve Carell, came in. He saw the absurdity. He realized the entire global financial system was propped up on a mountain of bad debt, and even worse bets, and he decided to bet against it all. He shorted the system. Now, for every winner, there has to be a loser, and the losers were epic. Take Bill Miller of Legg Mason. For 15 straight years, his fund beat the S&P 500. He was a Wall Street god. But in 2008, he went Elon on banking stocks like Bear Stearns and AIG, believing they were too big to fail. He doubled down, then tripled down, as they spiraled towards zero. His godlike status vanished and his fund lost over 55%. But here's the kicker. Was he held accountable? Was there any real consequence for losing billions of other people's money? Not really. He just started a new firm. The system that created him protected him. And finally, the biggest single loss belongs to Howard Hubler, a Morgan Stanley trader. He made a $9 billion mistake. $9 billion. He was shorting subprime from one desk, but made a much, much larger bet from another desk that the slightly safer part of the market would be fine. It wasn't. When the whole thing collapsed, his hedge blew up, creating the largest single trading loss in history. So while we watched heroes like Michael Burry and Steve Eisman win big, it's crucial to remember the system that allowed the disaster to happen in the first place. And the people who lost fortunes, or in many cases, just moved on without a scratch. The real story is darker and more cynical than any movie could capture. Thanks for watching.